What are you seeing for the sort of long-term settling out on this inflation rate? Do you think they can even get to a target of 2? Or do you think that that's more 3, 4.5, and yield's going to be a little higher than that a little longer?
Yeah, no. So we've built a pretty sophisticated dynamic factor model. We've been talking about this all year, really since February, which is, if you look at some of the core drivers of core inflation in terms of projecting the underlying mean of the time series, things like automation, globalization, or rather deglobalization at this point, the rise in public debt, monopoly power, wealth, wages, all that stuff, the things that have, contributed to, persistent disinflation over the last 30 to 40 years. All those things are, not all, but many of those things are moving in reverse. And the key takeaway is, when you sort of run the analysis, our model is projecting a range of about 70 to 120 basis points more in terms of the underlying mean of core PCE. Now, that doesn't sound like a lot, but what it effectively means is we're going to go from something that's, just inside of 2 to just inside of 3. And this is before we factor in any sort of incremental commodity price inflation, potential dollar depreciation, the other side of whatever Fed pivot we're likely to get over the medium term. And so all that stuff is going to be additional let's call it additional impetus to the underlying mean of inflation to transpose itself higher. And so I happen to think that, it's going to be very difficult for the Fed to get inflation, to stick inflation persistently in and around 2. I think 3 is going to become the new 2 as it relates to core inflation here in the US. Unless they really want to sacrifice, the economy to kind of achieve what is, will increasingly, in my opinion, become kind of an outdated political objective.
But didn't the Fed change their framework, Darius? Remind me, I'm trying to remember if this was right before COVID or right after COVID, but they went from they moved towards an average inflation target, right? It's never really a target. It's not an explicit target, but implicitly there's a band of comfort that used to be 2% a year, and then they moved towards something that was average. And I don't know if they specified the number of years that they were averaging out, but it sounded like they were trying to buy themselves some room in order to allow for some more inflation volatility, if you will. Wouldn't this sort of give them a little bit more leeway, given what you just described?
Yes and no. So we're well past the threshold of leeway, right? Like they going from 2 to 4 and saying, it's transitory. That's the leeway. Going from 4 to 9 is well beyond the point of leeway, and it's obviously an issue both politically and also to the broader economy and to capital markets. And so, if you the problem with having a 2% average inflation target in a world where inflation is 3 is that you're never going to get to below 2 to meet your average, right? And at some point, the Fed, has to acknowledge the fact that, the economy has changed. We have things like deglobalization and rising competition for resources, et cetera, breaking apart of supply chains, from a global perspective to a regional perspective. All this stuff is contributing to that. So the Fed, and by the way, Jay Powell has been one of the thought leaders in the global financial or global central banker community about acknowledging all this stuff, changing in real time. And so ultimately, going back to the pivot that they made, you highlighted, Richard, in August of 2020, to basically, they wanted to have more inflation to quote unquote let the economy run hot, to allow for the maximum, the achievement of what was a new kind of characterization of their employment mandate, which is maximum ... and inclusive, right? Is basically let the economy run hot so we can make sure that more disaffected groups who have historically sort of been kind of late to the party in various economic cycles with, getting wage increases, jobs, et cetera. They accomplished that. And they accomplished that in spades. And this is kind of where we are here with an economy that's very clearly overheating from a labor market perspective.